Hey guys, how are you doing? Crypto Insight UK here, bringing you back another YouTube video. So today I'm going to actually be discussing my more long-term perspective for crypto. If you guys did or didn't know that September is often a bad month historically for crypto in general, but we have positive signs leading into October and onwards towards the end of the year. Something I've really touched on in this week's newsletter. Basically talked about how liquidity is coming into the market. At the same time, the DXY is potentially coming down, and it could be a double bubble for crypto. Basically meaning that with the DXY weakening, that means there's more liquidity in the markets, and it gives emerging economies and other economies around the world space to be more free with their monetary policies. At the same time, so that's the DXY loosening against other currencies or weakening against other currencies. At the same time, monetary conditions in the US are also loosening, meaning there's going to be the rates are dropping from, I think they're 5% or 5.25% now, and they're looking at potentially a 0.25% or 25% basis point cut in September to 50%. And what has this meant for crypto historically? Well, if we look at this chart here, this is the DXY with Bitcoin overlaid. We can see that the DXY, when the DXY topped out, it took 71 days for Bitcoin to come up off of its bottom. That's a clear inverse correlation there between the DXY and Bitcoin specifically. And now the DXY has dropped from about 106 to about 100. If we have a look here, it's more clear. Let me just show you on the weekly time frame. Look, we've dropped from about 106 to down to the 100 range. Yes, we've had a short-term bounce, which I talked about a lot. I said we're oversold in the daily, the weekly that we're looking at now, but also the daily look. I said I was looking for a short-term bounce, but then after that is when we could continue with our trend. And then that's what I spoke about in this newsletter. But 71 days, it would take us to about the 7th of October. And that's when we would, if we have the exact same correlation as last time, that's when we could start to, or 71 bars, 103 days, sorry, 101 days. That's when we could see the tick up in Bitcoin specifically. And that's what I am looking for. This trend could continue. If we look at the pullback from the top to the bottom when Bitcoin started to push down, so it's about 12% there. And if we look here, what the pullback's been so far, it's about half of that, I think. Yeah, about 5.2%. But if we do continue and lose the bottom of this range, we could see up to like a 9% pullback, which could bring us down to like this sort of area here on the charts, which would give Bitcoin the potential energy to be able to run up the same amount that it has so far in this cycle, which currently Bitcoin ran up from about 15,500 all the way up to 74-ish thousand. That would give us about a 60,000 move up from here to taking Bitcoin to about 130,000. But then you've also got to think that's going to be at a time when governments are loosening around the world, monetary policy is loosening against the dollar, as well as the DXY will be the thing there. So that gives currencies around the world some space to play, but also liquidity conditions are going to be increasing within the US. So I think it gives us the chance for a much larger move to the upside than even we're considering at the minute. But it seems quite hard to say that because it's very easy to be wrong, and it's much easier to be conservative with predictions. But I do think we will see the top end of 100,000s, probably like anywhere between 150 and 250k this cycle. I think it's very possible we see 250k, but I'm almost scared to say it because of how easy it is to be wrong. I talked a lot about liquidity in this article, showing you where liquidity is going to come from, and talking through some of the different interviews with people like Michael Howe from Cross Border Capital. If you know him, he's an expert in liquidity. Definitely be listening to what he says. And then Pav actually went on to talk about on-chain analysis, which is very interesting. I agree with most of what Pav said, but I want to touch on one part specifically. I'm going to leave you guys some parts of this free newsletter to read if you want to go and check that out. But some of the things that he talks about here is the MV/RV ratio, which is basically how much money people have made so far if they're in profit. And he's showing that when we get back to this equilibrium line, basically people are like, the excitement's been taken out of the market, and it's normally when traders start to close positions, open interest starts to close, but it's when we start to see actually a kick back to the upside. Look, when we're in bull markets, we see this blue area here touched, and then we start to rally blue area touched, and then we start to rally. Blue area touched and broken, we start to have that big explosion. So that's what we're looking for here in terms of the MVRV ratio. And then this is the part that I actually don't know if I do or not agree with. The net realized profit and loss. He said, we've seen a similar trend examining realized profits and losses. We've returned to the same state of equilibrium with the majority of the market on average in the same position as before the ETF approval. In the previous cycle, we reached this point. There was a further correction before the market rebounded and experienced another upward move. Will history repeat itself this time? This is where I disagree, or not necessarily disagree, and it's not with Pav's on-chain analysis, because that's great. But what I think we are that's different is I don't think we are at this stage. Like, he's using this as an example, this first run up to the top that we created last cycle, like 68k or whatever it was, and then we came down and then did the 69k top for a double topping pattern. And he's presuming that this is our first like top. And I personally believe, or at least that's what he's displaying here, saying that we've just come down here. Basically what he's saying is we came to here, we came down further, pushed us into that zone before we started to push out again. But I personally believe we're more in an area like right here. I think we got over enthusiastic with our ETF. I've been saying this a lot. I think we're in this period here where we're just still working out when the bull run is going to start. This period went on for quite a long time, from like, say, like March all the way until the end of the year almost in 2021, before the big run up. And that's essentially where I think we are. So I think we're in this sort of period, and it's easier to see on the BLX. Let me show you the BLX, because I haven't actually planned this part of the video in terms of like what I was going to talk about. But when I was reading that news article, I really wanted to talk to you guys about where I think we are in the Bitcoin cycle compared to where many think we are. Let me see if I can find the BLX. I probably can't now while I'm talking. I've got it here. But like, this is, let's get on the logarithmic just so it's easier to look at. We could be in this period here. Look, we've run up, had that run up here, and we've consolidated for months. And this is, let's get on the monthly so I can just show you more easily where we are. Probably get myself lost now. I think we could be anywhere around this section, basically. This is the C19 sell-off. We had a pullback. We could even be here, genuinely. So this took 9 months to play out from the C19 sell-off before we started to get bullish. Realistically, nearly over a year. We've been in this chopping pattern already for, let's have a look. This is our 7th month, I think. Yeah, 7th month right now. But if we look at this cycle as well, this obviously was more aggressive, being as the market cap was smaller. We could be in this section. This is genuinely where I think we could be. Yes, we've touched all-time highs, but I don't feel like we went as high as we should have last cycle, maybe due to leverage or whatever you want to talk about in that sense. But we could be here. We could be here before we start to go on this parabolic run. And no one dares say that, because it looks so stupid if I'm wrong. I'm going to look so stupid if... That's why I don't put loads of like posts about this online, because if I'm wrong, I look so stupid. They're like, oh yeah, the market cap's so big now. Think of the amount of capital that's got to come into the space for that to happen. Bro, look at gold. Look at gold. Look what gold's done so far. Everyone said gold could never break all-time high. Guess what? Gold broke all-time high and moved up a further 27%. The market cap was at 10 trillion or 11 trillion. It's gone 27% higher. That's another $5 trillion that's just come into gold so far this year, while monetary policy is tight. Yes, I know they're going to they're hedging, looking forward, potentially geopolitical problems, but also to the ease in policy. Markets are probably trying to price that in before it happens. But guys, this is before monetary policy becomes like more loose and cash becomes cheaper. Gold has an extra 4 trillion added to its market cap in the space of 6 months. Like, what don't people get? 4 trillion would be like 3x of the crypto market from here. We'll put Bitcoin at, what we at now, 57, let's just say 60k. It will put Bitcoin at 180,000 just if we got that 27% that gold got while monetary policy was tight. That's how feasible and possible it is for something like this to happen in crypto. It just doesn't feel nice while you're in this like choppy sideways sort of period. And to be honest, I'm just going to finish by talking about XRP. XRP we've talked about. I'm going to get it on the hourly. Just to update you guys, I said this ABC correction could take us down to this grey box. We have currently set a low here, so this that ABC that we could have had, where this could be the bottom of the C leg, is now invalidated because this C leg is actually lower, but it's not completely played out yet. So let's just see what happens. It could be more like that. I would presume now that we do come and test that grey box, and I was talking about why, because of this open candle here on the left, that we're starting to plug, that might come into this area here. To be realistic, 51 to 49 cent would be quite sensible in terms of that sort of price target, because that part of the candle hasn't been closed yet, although we still could just close this candle here at 53 odd cent. So let's see what happens. We're looking at XRP, Bitcoin, XRP, ETH. We're going to look at them on the monthly and weekly time frame. We didn't get the closes that we wanted on either of those, although it's almost unchanged for Bitcoin. Look, we're still outside of the wedge that I had drawn in. We're just literally touching the top of it now as support. So let's see what happens there. And ETH versus XRP is still continuing with the trend of higher lows, just chopping about. Like, look, in this area here, we chopped about, we tried to break out, we didn't come down and set a lower low. We actually set a higher low and then had that push. Here we set a higher low, had a push. Now we're just chopping about, nothing's confirmed until we start to lose this level, and then we can see, or we start to break out and break this level here. So that's what we're looking for XRP and ETH in terms of the weekly close for XRP, ETH. Just going to take my drawings off now. Obviously, we want to get close above this line at 0.23. Just going to take them off so it's a bit clearer for you guys. You can see we're still massively outperforming ETH. Yes, we're hitting resistance here, which is fine. It's where previous support was, so we're clearly going to see some resistance there. And on the weekly, XRP against Bitcoin, similar sort of story. We're just hitting this resistance level, as I've been talking about a lot. And let's just show you the monthly now. On the monthly, it was undecided last month of what to do next, but we're very close to having a bullish cross there for XRP Bitcoin. One decent month here, and XRP should really start to rip against Bitcoin, and that's one thing that we've talked about a lot. It's very depressing sideways and downward action. Then all of a sudden, things can change very quickly. And XRP against ETH, very similar. We've had this retrace so far. Are we going to get more than that? We've got the bullish cross on the monthly for XRP ETH. It's now time just to keep yourself focused, keep yourself locked in. Don't get emotional. Don't get sucked in by narratives, but understand that a lot of capital is potentially about to flow into this space, and it doesn't take much to move the dial very, very quickly. As soon as capital comes, sentiment will follow, and then everything starts to get happy clappy again. It's a good time to be dollar cost averaging, in my opinion. I've been saying that for the last month or so. And yes, prices have continued to come down, but that's even more discount. If you believe, as I do, that this space is going to see all-time highs this year, potentially much, much larger than people perceive, then it makes sense to be dollar cost averaging here. Who knows is the absolute definite answer to anything, guys. But we just have to go with the research, say that history is going to repeat, and look how much liquidity is about to come into the space, and see expansions in other market caps like gold, equities, for example, almost at all-time highs as well. Not going to touch on them too much. They are at all-time highs. So don't believe the hype, guys. Just stick in your lane. Don't get sucked into any emotional games, and hold on for dear life, because very soon things will look very different and you will feel very different, in my opinion. Let me know what you guys think in the comments. If you enjoyed, please share it with a friend. Peace up, A-Town Downs, Crypto Insight UK would say.